Oliver, Swedish banks, let's talk about them, are much neglected but impressively stable corner of finance. Results season kicked off today with Swedbank Q1. What did it say about the industry?
Well, it said that Swedish banks, and particularly Swedbank, are very tightly run, very well managed businesses. Not too much in the way of top line growth, although it was perhaps slightly better than analysts were expecting on the income side, but just very efficient, very low cost, and managing to be very profitable because of that.
Which is interesting, isn't it? Because one of the things we know is that Swedish banks are nowhere near as geared as international banks, so you'd expect them to be at a disadvantage, but it doesn't seem to be so, does it?
No, it doesn't. They have an awful lot of equity in their funding mix, partly for regulatory reasons. But nevertheless, Swedbank managed to have a cost-to-income ratio of under 50%. That's a very, very low cost by contrast to the big European banks, the likes of Credit Suisse and Deutsche Bank, had a minimum of 80% last year. So really, it's a very tightly managed business. Also, very low impairment charges, so low losses on bad loans. So very, very well managed.
So it's almost a potential inspiration for some of the other banks that are struggling with low single-digit ROEs, that if you can get on top of costs, if you can get volumes ticking over, you can get those ROEs up.
Yeah, absolutely. Although the word of warning perhaps is how well placed are they if the economy does start to recover? They get such good cost numbers because they've been cutting. Are they in a position to benefit if the European economy starts to pick up at all? If it does, maybe these aren't the best banks to be in. And certainly last year, when the whole banking sector in Europe started to recover, we saw the Swedish banks materially underperforming the rest of Europe as everyone thought everything was going to be okay.
Right, so they're lower risk, they underperform a rising market, they presumably outperformed during the meltdown.
Yeah.
And do we have any idea of their kind of normalised earnings now? I mean, how are they just trucking along operationally now?
They're doing pretty well operationally. They're still shaving a few costs out here and there, and they're just kind of steady as she goes. That's the story there. I'm not sure there's much more growth to come out of further cost cutting. So it's just now waiting to see if they can get any increase in volumes at all.
So quite a bit safer. Do you have to pay up for them? Are they expensive?
You do, yes. Certainly Swedbank, it's over 1.5 times book value. That's a big premium to the rest of the European sector, which is closer to 1. So you pay up for this kind of stability, but that's what people have been after for the past few years.
So a steady investment if you're a little bit concerned about the outlook for Europe, and a good set of results. Thank you very much for that update.